This is the MTPredictor weekly market update for March 23rd. So we're going to start again with the monthly chart of the S&P and just kind of go over where we are. But first, let's just note that we did get through the Fed meeting last week, and obviously it was a bit of a market mover on Wednesday, and Thursday and Friday were also pretty good move days as far as the intraday action. And everything was leading up into options expiration, and we talked about this last week. That tendency, about 70% of the time, the market likes to rally that week into options expiration, and as we'll see, we certainly did see that. Also in the background, we have the situation with Russia and Crimea and the Ukraine, and just to give you some thoughts on that, I've done some research on Putin, and this guy has hung around there in Russia for 14 years now. He's been in power. All right, to do that is a bit of an achievement, I would say, in that landscape, and he's arguably one of the most powerful men in the world now, powerful leaders in the world. We're putting sanctions on Russia now, and I think the initial impact obviously is going to be a harsh one on Russia, but I think in the long term it's actually going to work against us. This is just my thoughts. That they will more and more, and they've publicly stated this, will become independent of the U.S. We're probably going to put sanctions on their ability to use the SWIFT system. That's that international system for wiring, and eventually they're going to create their own. They already have the alliances with these BRIC countries, and looking to trade, and they are trading in many ways outside of the U.S. dollar, and that's, I think, just more and more. These sanctions are just going to more and more push them down that road where they are become independent of the U.S., including the U.S. dollar, and not just them, but all the other countries that will follow, because there's more than a few countries that would be more than happy to start trading outside of the U.S. dollar. In other words, having the dollar as the dominant currency in the world. And that, of course, would go against our government's interests, and would cause problems down the road, because our government will defend the dollar around the world, and whatever that takes. So that's kind of the story behind the story to me. That's happening here in this situation with the Ukraine and Crimea and so forth, in Russia. So anyway, something to look at down the road, how this all plays out. But Putin is not a guy to be underestimated, in my opinion. Let's look at the monthly chart here again. Now we have a tool, what we call our decision point tool. And if I just right click here and I choose this decision point, it gives us levels ahead of time, before the market gets there, of potential turning points in the market, areas that we want to take note of. Right? So if I take a decision point off of this new swing low, it gave us this decision point here, and you can see how the market found support in this level, and that's where it rallied. Found support in this level, and that's where it rallied. And here was that last swing into the low, and this is why we were paying attention to the level that the S&P has achieved here, because it's into this level. All right, now let's go down to the weekly chart. Let me clear some of this stuff off here. All right, so we know we're in that monthly level. On the weekly chart here, we've been looking at this, so it shouldn't be a surprise. Here we had our decision point sell signal here. Now the trend indicator is blue, meaning that the larger degree trend is up, and we can certainly see that. But the Elliott wave pattern here that's associated with this sell signal we looked at was a 5-wave pattern up. So the tendency is, after we've achieved 5 waves, now it's just reached the minimum wave 5. There's also a typical wave 5, which is, this is the level that the end of the trend before you get a correction typically unfolds in the typical wave 5 level, right? But we have some decision point resistance here. We're in a larger degree, you know, that monthly resistance. Last week we got a red sellers candle that told us that the sellers were overcoming the buyers here for the first time in the wave 5 target level. And so the software gave a signal here, and we can just right click, choose the analysis, and the software shows us the entry, stop, and target for that setup. And the correction is typically to the wave 4 DP, so that's the software knows that's the target there. So you know, short positions could have been built here, you know, whatever your choice is, whether it's options or ETFs or whatever the case might be. But we talked about last week that you know, 70% of the time the market likes to rally into options expiration, so we actually did close the week higher, which wasn't a surprise, and it was a blue buyers candle, so we did have buyers overcoming sellers last week. So you did have to anticipate, if you were short here, that this week would be a potential rally week. Now we've got the Fed meeting out of the way, the options expiration out of the way, and we'll see how things, if this stop there at 1887 3/4 holds, and if so, we get some rollover and perhaps sell off down to the target, the weekly target, down there around 1712.50. If we go to the daily chart, kind of drill down here. Again, we know we had our resistance even in terms of the daily chart. So this was the last highest of the swing highs, and we take a decision point. This is also the weekly decision point resistance, where we see the wave 5 came in here, and there's the correction on the daily chart. So on, you know, this is probably the chart you'd be actually using to set up any you know, trade setup, actually trade off the daily chart rather than the weekly chart, and it ran, you know, a little better than twice your initial risk from the entry there at 1869. So I mean, you could have come out there with twice your initial risk. If you're still holding, again, you had to anticipate this rally, which should now be a potential wave 2. Right, now if this area holds as resistance, we did have sellers overcoming buyers. Obviously Friday we had a hard sell on Friday. We can look at if we look at the 3-minute chart in a bit, you'll see we had what we call a holy grail trade set up there. But anyway, we can project wave 3 down here. Let's see where that comes in. I'm going to use the wave price target tool here. I'm going to go down wave 3. 1, 2, 3. Now I'm projecting wave 3 here. Ideally, this rally needs to unfold as an ABC correction. Right, I'm just going to check the minor pattern just to see if it comes up with any. Right, no, just a straight line correction there. So not a true holy grail, but I'm projecting the wave 3 target here just to more out of curiosity, just see what the risk reward is. About 5 times the initial risk. So if this holds as resistance, you know, we could well, actually let me reset that up here off of this. So a break of Friday's low would be an entry to the short there, 1855 and a quarter, with a stop at 1877. So you could be short from up here. You could initiate a short here if they break Friday's low, with a target down here in wave 3 at 1775 basically. Take a decision point off of this level here, as you're going to find some support here in this level as well, which is going to be just probably shy of twice the initial risk, about 1.8 times your initial risk there. Alright, so that's how this is setting up, but let's just look at it on Friday, just to show you in terms of the 3-minute chart here what we were looking at intraday. Again, let me get rid of that. We don't need that on the 3-minute chart here. But this level here, I'm going to go to the 15-minute chart. Okay, on the 15-minute chart here, this is the chart that we'll use. This is the larger degree if you're intraday trading. You can come to the, you're trading off, let's say, a 3-minute or 2-minute or 5-minute chart. Come to the 15-minute chart to map out your larger degree support and resistance, just like we use those decision points on the monthly chart to find support and resistance on the weekly chart, and the weekly chart to find support and resistance for the daily chart. So on Friday, here was Friday's trading action here. Well, if we take it, here's the last two swing highs. All right, we take our decision point tool. Oops. Here's the, this one's a little higher than that one, as we'll see here. This level here. And then this swing here was just above these swings, so let's just take a decision point off of this level as well. And we can see we had some overlapping resistance up in this level. So we would anticipate that trend, which was up here, may terminate and become a trend back in the downward direction. Now we're not going to trade off the 15-minute chart, but we're going to use that as our major resistance level. So what we'll do is we'll go down to the 3-minute chart, and we'll take a look at what transpired or set up on the 3-minute chart. So now here's the 3-minute chart, and you can see the market gapped up into that major resistance, sold off. Because this is what we call a significant high, it's in a major or larger degree 15-minute resistance level, and we anticipate the trend may change and become a downtrend here, so this can be potentially a wave 1. And then Elliott said the best time to be, in this case a seller, would be after the first A, B, C correction. That's what this TS3 is. So if we look, and let's see if I can get this on here. Let me move this so you can see the A, B, C. That's what the software sees, and that's why I gave the signal here. So if we do the analysis, because this is what we call a trade signal generated by the software, it's going to right click and ask the software to analyze the setup. Well, the software doesn't know that this is an important high here, and so it's just looking at this as an A, B, C. But with the trained eye, we know this is a significant high here. Here's the impulse move away from that. The first ABC correction is now a wave 1 down, a wave 2, and we're looking to play for the larger typical wave 3. So we're not looking at it as an ABC, we're looking at it as a 1, 2, 3. Why? Because of the start of this sequence was at a significant high from the 15-minute chart, this decision point level. Alright, so here was a setup on Friday. I can move these in. This would be with a 1 tick offset. And you can see that makes the target here about 13 times your initial risk. So say on a $400 risk, it'd be a $5,300 profit at the target there. It's a very one of the lowest risk, highest reward trade in the book. All right, and this could be a weekly chart, it could be a monthly chart, it could be a 3-minute chart. It doesn't matter, the patterns are all the same. It all starts with a significant high, as determined by the larger degree time frame. So if you're on a 2 or 3 or 5-minute chart, you go to the 15-minute chart to map out your major support and resistance, those decision point levels. If you're on a daily chart, you go to the weekly chart. If you're on a weekly chart, you go to the monthly chart, and so forth. Okay, so that's how we can use the software. It doesn't matter the market or the time frame. It's the analysis is the same. All right, so let's look at some other stuff that we need to cover here, if we can quickly. Let's look at the euro. The euro reached some. There's some weekly resistance here. There's a decision point sell signal on the weekly chart. If we want to look at that quickly, right here. Obviously the trend is up here, but we have to take note that we do have a resistance level here. And if we go to the daily chart here, you can see it's unfolded, that rally is unfolded in a 4-wave pattern. And we had, let's see, is that blue candle? Yeah, it looks like a blue, well no, is it black candle? Alright, so we still have a neutral candle here. We don't have an indication that buyers are overcoming sellers here in wave 4 yet. Alright, so we have to hold off on anything there. If we want to project wave 5 up, we can do that, but we don't have any indication to be going long at this point. Let's just look and see where the wave 5 target, if it does get going this week. Here's the wave 5 target, so retest that resistance area. If it does retest, then we would anticipate from in this area another correction back to the wave 4 DP. Let's look at, well, we need to look at silver. So we had some selling coming on silver last week, you know, with the Fed meeting and so forth. But let's go to the weekly chart here. Kind of scrunch this up. So again, let's just put our levels. We know we had a significant high up in here, and the correction should be back to the wave 4 DP. This is the area that we're in now. And that's why this is a significant area. If it holds as support, then the trend, which was up prior, should continue up. But if they take this area out to the downside, then obviously we should see more, a lot more downside. But what we were looking at here in terms of our short setup was a wave 4, and we were looking for a move down into wave 5. And let's just project wave 5 down here. Okay, so we had this little rally up to basically the 50 period, that's the red line here. And we were watching this area pretty closely because it'll be the area that probably determines whether or not we stop on the short side of the trade. So stops at break even there on 22.90, 23.10, depending on where you want to put that. But if this area holds as resistance, we get this thing to roll over again. We can break that last swing low here, retest the lows at least, and we'd have to make a new low to get into wave 5 there. That would be around, again, that 1750, 1760 level, where you'd want to begin to take profits on the short there. All right. If, on the other hand, this ends up being the ultimate low, all right, then we'll just wait for the trend to develop in the other direction and wait for a pullback to start being a buyer. But I'm not convinced yet that that's the case. I'm looking to see if they'll retest, at least retest the lows in the wave 3 low here, and perhaps overshoot at least into the minimum wave 5 target here. Alright, so that short is still alive. We'll just have to wait and see. Only time will tell how it's going to play out, but in the meantime we're protected on a risk-free trade. Alright, let's look at some of the option candidates. Again, Beam, because of the takeover there, that's, you know, it's going to flatline pretty much there. Boeing, you can see the buy price at 124.43 if you just bought on the buy date. Otherwise, if you're waiting for that pullback, we're basically trading right around where the buy price there. But here's the next daily support there. You can have some 200 period moving average support in there right around 120. Should be a natural kind of support area as well if you're not along that. Hershey's now has the TS3 buy signal here, and so you can certainly use that. The buy price was at 105.45 in terms of the actual buy date for the seasonal tendency, which is to run higher between March and April into May. AVP, that's Avon. Again, in that you can see this area, major area of support here that we're down in here now, and we're in a time period where we anticipate Avon should rally from that level. Okay, next up, ADS, that's Alliance Data. The buy date there was on the 14th, around that 278.55, and you can see it's had a nice rally there already. Overran the DP support, but was sold off on Friday hard, back into that or below that zone there. So that was the first area of resistance that you can consider there. We'll see how it, that this runs into the sell date will be April 24th, so you still have plenty of time if you still want to hold this to the long side. All right, next up is Allstate. Buy date there was on Friday at 56.06, 56.07 there. So we'll see how that one begins to unfold, as that just started. Republic Service Group, Republic Services, I should say, RSG. That start date was March 19th. It goes through April 22nd. So that buy price at the close there was 34.21, and it's went up there and it sold off with everything on Friday. And then the last one that we'll be looking at, that buy date hasn't started yet, and that will be SNA, which is Snap-on Tools. Take a look at that chart here. That buy date will be on March 26th. So obviously another stock in a strong uptrend here. And that seasonal tendency will run through May 1st for that stock. So that won't happen until March 26th. So a few days later this week. All right, so we covered a lot of ground here. We'll wrap it up here. I went a little over time. We'll be back next week. We'll see how things play out. Full week of economic data. So should be a good, healthy week of trading. Enjoy the trading. We'll be back next.